Hello everyone, welcome to FinTorch. Today we are going to talk about FP&A, financial planning and analysis. This video will focus on what the three main aspects the FP&A addresses. So it addresses three questions: where are we today, where are we heading, and what should we do next. So this helps in further decision making, which we will obviously going to talk about in a while. So let's start. And so this is the traditional FP&A. What is FP&A? So this is a snapshot which you can see on your screen. uh, it it starts from planning and it ends with the decision making, right? So in between, these are the ingredients to make it a success. And a lot of CXO CFO are like taking decision based on this process. So, what is FP&A? FP&A is not only simply about creating Excel reports. It is connecting the business strategy with the financial performance, and helping the management with some decisions. When I say financial performance, financial performance using uh, past data and market intelligence and industry trends and so on and so forth. Yeah. So if I have to summarize it in a one liner, the FP&A cycle is starts from the plan budget, then check the actuals, analyze, do a variance analysis, then do the forecasting, and then finally decide. So this is overall about the FP&A. Now moving on to the first step, which is planning. Also the second step, which is the budgeting. Let's take an example here. Suppose the company wants to grow revenue by 20% next year. What the different teams does is like this. For example, sales, it estimates how much they can sell, and then operations team estimate productions requirement, and they also see the current stocks and assess how many extra productions they are planning. Yeah. If it is a, for example, if it is a factory, so how many productions they are planning. And then HR team, it plans the required workforce, plans the required workforce based on current attrition rates in the company and so on and so forth. Yeah. And then finally the finance team, what it does is translates its the plans into some financial numbers. Yeah. So on the right side, you can see on the screen. So this becomes the financial baseline, we can say. So the revenue is 100 crores, the operating expenses is 70 crore, and then EBITDA is 30 crores. So this was about financial uh, planning and budgeting. Moving on further, here the real game starts. This is again, we are talking about traditional finance, traditional FP&A. uh, uh, because of AI there is a lot of change, to which, stay tuned. We have already made a video, or in case you are watching this first time, you will either get it once it's uploaded, or you can see it in the I button over here. So the traditional FP&A actuals, it comprises of actuals, then seeing the actuals, reporting, and then performing variance analysis. Yeah. So the sales happen, employees are paid, materials are procured, and all this is through the ERP. It is all captured through the ERP and the financial system which a company is having, for example SAP or say Oracle. And the on the left side we can see budgeted revenue. For example, here it's 100 crores in this example, and actuals, when the company is comparing, it is about 92 crores. So there is a shortfall of 8 cr, which is flagged as unfavorable variance, yeah, because it is 8% below the budget. And then FP&A doesn't just flags, hey, there is a shortfall of 8 cr. It goes one step further. It asks relevant questions like, why all these things had happened. So for example, was sales volume lower, did prices decrease, or say for example, if the company has recently lost a major customer, or say did there was a major change in the product mix of the company. So this was about it. And then moving on to the main thing is the forecasting and decision making. Here is the case where the CXO and the CFO uh, gets the view and they take the decisions. So based on actual performance, FP&A updates the forecast. Example, we saw just now, from 100 CRs budget to be moved to 95 CRs, based on the latest forecast. Yeah. So there are three case created. One is the in the middle, you can see that is the base case. Base case talks about what most likely the outcome can be, and there is always two sides. One is the upside and one is the downside. Upsides focuses on the optimistic outlook, whereas the downside focuses on the conservative outlook. So basically you get a range, minimum, range, maximum, and then also you get a median, or say most likely outcome. Yeah. So these are the three cases which help the management to like do some scenario or analysis. For example, if they can uh, reduce cost, or say increase the prices, or say hire more people who are good at sales, increasing revenue, good at GTM strategies, or say some SMEs who are having some subject knowledge which will enhance their to overall productivity, and then also help in increasing sales. For example, if they hire someone with a better relationship outside with the clients, for the networking purpose, they can increase the revenue. Yeah. And then invest in new products. Sometimes what happens is, when you are generating a product, there is a product life cycle. The product has probably reached the maturity stage and is probably started falling uh, in the declining stage. Yeah. So they think of probably launching the new product, and uh, also they think of change in any current strategy, or say anything. When we say strategy, it is a broader term altogether. But yeah, probably restructuring, or say it's a wider strategic thing. We can make a separate video on this. If you want, let us know in the comment, and we will make a separate video. So this was about it in the FP&A